Hi there. I'm Realtor Bert today, and welcome to another edition of my educational video series called Sipping Coffee or Tea with Realtor Bert today, where we navigate through the hype, the hoopla, and yes, sometimes even the media negativity surrounding the real estate industry. Today's topic is an interesting one. We're going to be talking more about the first time buyer home series, and this one is understanding mortgage options. So we had another one. The first one was, of course, the steps to buying a home, and then we'll have two more subsequent videos in this four-part series, and the other ones will be the importance of credit scores as well as saving for a down payment. So let's get into today's topic, which is, of course, understanding mortgage options. I'm going to be talking to you about 7 different financing options which are available to you. So the first one is a fixed rate mortgage, and this is typically going to be an interest rate which remains the same throughout the life of the loan. So typically we're going to see 15 or 30-year mortgages. There are some 20-year products as well, but the most popular ones are 15 years and 30 years, and they're fixed, right? That means that those they're not variable interest rates, and they will stay the same throughout the life of the loan, however many months that is, right? And they're predictable monthly payments, and it really does help to make your budgeting a lot easier. They're gonna ask you more than likely to escrow taxes and insurance. So it's true PITI, as we say, right? Principal, interest, taxes, and insurance. So as a first-time home buyer, it's very important that you understand the aspects of each one of these loans, and the fixed rate mortgage or conventional loan is one of those. The second one is adjustable rate mortgages. We don't really deal with those a whole lot. The mortgage interest rate environment right now is rather volatile, but it has been much higher right now in the summer of 2024 than it has been in years past, right? During the COVID years, oh my gosh, it was super cheap. I talked to a homeowner today, 2.25% on his VA loan. Can you imagine? Crazy. We'll never see that again. It was never like that in the history of ever, and we'll never see that again, ever. Mark my words. 2.25% for a for an interest rate. No, we're hovering around 7 right now, which is still below the historical averages of 7.76% going back to 1971. When they first started to track these numbers through Fannie Mae. But I'm telling you right now that the ARMs, the adjustable rate mortgages, are not very popular. That's how we got into a lot of trouble back in 2008 when that housing bubble burst due to subprime lending. If you have any questions about what that even all that stuff even means, I'm more than happy to answer any questions you might have along the way. 210-376-TALK. Very easy to remember. San Antonio area code 376-TALK is the number. I'll answer any questions. That's why I put these videos out there, to be a resource to the public. So these interest rates, or these ARMs as they call them, can change periodically based on market conditions. Yikes. Initial lower rates can be attractive, but they come with a risk, right? There could be higher payments in the future. So that's the second one. The third one is FHA loan, okay? Federal Housing Administration. They're backed by the Federal Housing Administration, and they're ideal for first-time home buyers, right? They're pretty flexible as far as a DTI. We talked about in the last video, debt to income ratio. How much do you have coming in? How much do you have going out each month? And that's typically a correlation between the two is a percentage. And those DTIs can be a little bit higher with FHA loans. It's 3.5% down. The conventional mortgage that I talked about earlier, the first one, that's typically 5% minimum as a down payment. FHA is 3.5%. So they're a lot more flexible in terms of their lending standards and guidelines. And that lower down payment I'm talking about, which is required, has a lot more flexibility in terms of credit. So the fourth one is our VA loans, right? And those are available through the Veterans Administration, right? The Department of Veterans Affairs. And that's available to veterans, that's former military members. Thank you for your service, by the way. And those of you, thank you to those of you that are active duty, because you have eligibility through VA, through the VA for those loans as well. Now, what's special about those? Well, guess what? No down payment. It's a great way for us to give back to our veterans, and they have very competitive interest rates. What I will say about that is that's a terrific way to get into a house with zero down. And what we'll do a lot of times is we'll offer the seller a little bit more money in order for them to offer back to the veteran some closing costs, so they can truly come out of pocket. And that's put in paragraph 12A1B, settlement and other expenses in our Texas 1-to-4 family purchase and sale agreement. And we're able to help the veteran out even further with a lot less out of pocket, if anything at all. The fifth one I want to talk about is the Texas Veterans Land Board, or Texas VLB. So my lender partner is Pat Fitzgerald. He's a trusted lender and friend, and I want to tell you why you should consider working with him if you're a veteran or active duty, because he is recognized by Texas Veterans Land Board as one of their top lenders in the state of Texas. He's right here in San Antonio, and he's with USA Mortgage, and he's terrific at what he does. In fact, I met him 9-10 years ago at the board offices where he was giving a class about VA loans, right? I was learning from him, and we struck up a conversation afterwards, and we get to know each other very well. The rest is history, and he does a lot of those loans. And the Texas Veterans Land Board is great because although there's a funding fee, believe it or not, they offer lower rates than VA. So it's through VA, but it has to be a Texas veteran, and he can talk to you about some of those eligibility requirements. But there's a terrific interest rates involved with those. So number 6 is kind of a takeoff on one that we talked about earlier, which are conventional loans. These are not insured by the government, typically require a higher credit score, 5% down, and they're available in fixed or adjustable rates with various term lengths. Okay, so the 7th and final one I want to talk about are USDA loans. That's United States Department of Agriculture, right? And they are offered by the USDA for rural and some suburban home buyers. There is a website. I can walk you through that. I can help you find out whether or not a property is eligible. There has to be an eligibility. There is a map for this. Right through USDA, there's a map, and they will tell you whether or not a house is eligible for a USDA loan. And there's no payment required on those either. And guess what? They're lower interest rates. Pretty good, huh? Well, reach out to me if you have any questions about these 7 loan products I just talked about. And this, of course, is understanding mortgage options in this video. Once again, it's the educational video series, Sipping Coffee or Tea with Realtor Bert Tade. Hopefully you enjoyed this video. Once again, if you have any questions, feel free to reach out to me at 210-376-TALK. Google my name, Taddei is my last name. First name is Bert with an E. If I can answer any questions, it's bertknowsanantonio.com is the website. You can also reach me there. I'm here to be a resource to you, the home buying public, particularly first-time home buyers, because I still believe home ownership is the cornerstone of the American dream. So that's it for now. Thanks for watching my video.